It depends. It's our dialed in edition with practically zero numbers here. What we're going to do over the next 4 weeks is we're going to get you really focused on numbers and understanding what's selling and where in the quadrants at the certain price points, and more specifically the styles. So next week we'll touch on apartments, following week we'll touch on semi-attached, following week we'll touch on detached, and then followed by row houses. So we'll see how that goes. We'll see what your thoughts are with that. But for this quick segment here, we're just going to kind of break down the sales for August here. We had actually a fairly decent month in August there, 2157 total sales. 31% higher, or pardon me, 37% higher than last year. Single family was making up almost half of that sales inventory there. 1,300 single family homes, up 31% over last year. So what's important is we're not quite in a balanced market yet, but we're starting to see a little bit of a trend towards a balanced market. So it's great for the buyers out there that, you know, have been waiting for either inventory or prices to kind of, you know, adjust themselves a little bit. But we're still lacking a little bit on really good inventory right now. So, you know, it's keeping some of our buyers on the fence. But you know, we're coming up to almost 3 months of inventory, which is really good considering back in the spring, we were sitting a little bit under at one point of 2 months and kind of crested over the 2 month hump there. So just something to be aware of, you know, and then, you know, the benchmark price is almost $460,000. You know, it's slightly lower than last month, but it's still on a good pace right now. So we should be happy with that. And, you know, we're starting to see, you know, inventory, or pardon me, we're starting to see, you know, us coming out of a funk, but we still need to be mindful. I mean, Globe and Mail wrote an article last week. You know, they were talking about downtown lease space is still around 33%. They think it could trend up to 40% by the end of the year. But the fact that there are some tech movement coming into Calgary, companies coming into Calgary, that's really positive for us. But I said I wasn't really going to talk about numbers, so let's move on. So we've sort of touched on the single family, the semi-detached, both the inventory and the sales levels, you know, did trend down a little bit. So there really hasn't been much change on, you know, in terms of pricing, or in terms of like movement, in terms of like the months of supply there. So that's kind of consistent. Row houses, you know, also keeping pace. What's interesting is they did actually trend down under 3 months of supply. So row housing is still really an affordable option, location-wise. So there's a lot of value with row houses there. And then our last part is talking about the apartments. August, great months for apartment sales, but unfortunately, with the increased amount of sales, we also saw an increase in inventory levels. So we're not really seeing the knockdown or the chomping of the months of supply for apartments. That's our quick couple minutes of our weekly segment here for It Depends. If you want to get dialed in and want to know what your house is selling for, or what your community's average is, or what's going on in there, by all means, reach out to us. Remember, we're not just Calgary born and raised. We are kick-ass realtors. Cheers. Enjoy the rest of the week.